to invite the auditor Mark Asconci from BDO to present our financial statements, which you also had when you came in and were handed, and I'm sure you've read these cover to cover.
So just first wanted to say it's a pleasure to be in this beautiful city. My first time here since I was about 13 years old, and it's absolutely beautiful. And I also want to thank the board for giving BDO the privilege to work with the Canadian Kennel Club for another year. It's been a great relationship with you over the years, and we look forward to continuing that relationship. So I'm going to flip through the financial statements fairly high level. If there's any questions, I'm happy to answer them at the conclusion of my presentation. I'll start off on page 2 on our auditor's report. So we had another successful audit this year, which is in large part in thanks to Sandra and her team in the finance department. As well as Murray Botterill and the Audit Finance Committee, who have done a fantastic job providing stewardship and leadership over the years that BDO has been your auditor. So thank you very much for your involvement. So as I said, we had another successful year. We have the easy part, coming in and performing the audit on the statements. We always like to say that the second page, the auditor's report, is really the only page that BDO directly prepares. The rest of the statements are management statements. And Sandra and her team spend the entire year working tirelessly to prepare these financial statements and to make sure that they accurately reflect the Canadian Kennel Club at December 31st, 2015. So thank you again. I'm going to walk through some of the very high-level changes in the statements. I'm not going to go through in detail, but what I'll do is I'll start off on the Statement of Financial Position, which is page 3. A couple of significant changes here. If you notice up at the top, the first couple of lines, you see cash has gone down by about $900,000 from 1.7 to about 800,000, but you also see almost an equivalent increase in the line below that, which is short-term investments. So all that's happened there is that as excess cash has built up, management has made the prudent decision to invest those into some short-term investments, even though interest rates aren't great right now. It's better to earn something than nothing, so management has prudently invested those funds in some GICs to earn a little bit of interest income. Going down into the liabilities, so the accounts payable, you'll notice, has decreased quite a bit by about $100,000 from $411,000 to about $310,000. That's in large part due to an accrual in the prior year to Quadrant, who was providing some marketing consulting for CKC, and that was an unusual item, so the $300,000 is sort of back down to that normal level of accounts payable at year end. Going down, the deferred revenue is quite a big number, even though it's relatively consistent with the prior year, the $722,248. That is membership fees that all of you have paid in advance for the membership year. So until the services are provided, those fees are deferred. You'll also notice that the obligations under capital lease, there's a few leases for equipment, and those are coming down to an end. There's a current obligation of about $2,000, which I'm sure by today has actually been paid out completely and no longer exists. So there's no longer any capital lease obligations. The net assets is an area that has its own statement, so we'll go through that in a couple of pages. So I'd like to flip to page 4, the Statement of Operations. So just a reminder for the non-financial people, the Statement of Financial Position that we just went through shows the snapshot at a point in time of the financial position of CKC. The Statement of Operations shows the activities for the entire year ended December 31st, 2015, with comparatives for 2014. So this gives us a good basis to analyze and look for changes. So revenue overall, fairly consistent with the prior year. An increase of about $100,000 from $5.3 to $5.4 million. You can see the various components of that, most of which are actually quite comparable to the prior year. The general revenue is up a little bit, and that's due to additional interest income, which, as I mentioned before, now that there's more short-term investments, we're driving more interest income off of those. And then the programs, projects, and initiatives is almost double from $10,000 to $18,000, a very small amount. And that's due to the Judges Education Program, which contributed about $8,000 of revenue this year. The expenses down below that went from about 4.9 to 5.4, just short of 5.4 million. So that's an increase of about $500,000. And then below that, you'll see the net income, which is the net of the revenue minus the expenses. It's down from about 460 to about $46,000, and it's just the addition of the revenue subtracting the expenses from it. A few of the reasons for the expenses going up by about $500,000. There's been a couple of new initiatives. There's been some IT consulting expenses with LogicSource, which have contributed about $250,000 in additional expenses in the current year. There's also been additional marketing expansion, consulting fees with Quadrant, which has also been a non-recurring item that you'll see in the current year that wasn't in the prior year. So all in all, as I said, expenses are up about $500,000. Going down to the second to last line, the loss from subsidiary. So that is Apex, the former publishing company that is now non-operational. It is now fully wound down, and the $2,000 you see there was just a few additional costs that were incurred in the current year that CKC paid on behalf of Apex, just in terms of winding up Apex, because Apex does not have funds of its own to pay off those expenses. So the net number at the bottom, you'll see 44,516 is the excess of revenue over expenses for the year. So it's been another successful year. Flipping on to the next page, the statement of changes in net assets. So this shows the net assets, which would be the cumulative net excess of revenue over expenses since day one of the Canadian Kennel Club ends up in your net assets. And those net assets are segregated into different buckets, so to speak. So each of those columns you see represents an initiative of the Canadian Kennel Club that funds have been set aside in order to pay for in the future. So the capital assets, the leftmost fund, has a balance of $255,000. That represents the money spent on capital assets. So this could be equipment, furniture, anything that the CKC is using that we've spent our own money to purchase over the years. The next column, which is now down to zero, is the externally restricted charity dog show fund. So this was a fund that had been set up a number of years ago, and it's now been wound down, and you'll see the remaining 69,283 is the funds that were dispersed, and that fund is now down to zero, and to my knowledge, I believe there's no intention right now to use that fund in the future. The next column is the internally restricted for election fund. You'll see $50,000 was transferred in this year. The elections, which are held every 3 years, we fund them in the previous 2 years, so typically $50,000 a year goes into that fund, so that by the time we get to year 3, there's enough money built up in that fund to cover off the election costs. And again, that's a common practice in not-for-profits, just to make sure that the money is set aside for future initiatives that require it. Speaking of which, the next fund, which has the largest balance, is the internally restricted IT Improvement Project Fund. You'll see it started with a balance of $789,000. $212,499 was spent out of that fund during the year, leaving $576,828 to be spent on the future IT initiatives. So the total of all of those funds is $626,828, and in addition to that, there's also unrestricted funds of $1.7 million. So these are funds that have been accumulating over the years from surpluses that can be spent on any initiative that the board chooses over the next number of years. They could also be transferred into the funds that I just went through to help build those up or replenish them if that is necessary. The next page I'll flip to and very quickly talk to is the statement of cash flows. That's page 6 of the financial statements. This shows the different sources and uses of cash during the year, since cash is very important to have on hand in order to fund future operations. This just gives you a snapshot of what the money came in from and was spent on over the course of the year. The first subtotal of $62,160, those are the funds generated from operations, so the general day-to-day operations of the CKC, and that's an area that you always want to see some positive cash flows in. And then you'll see some investing activities down below. Some funds were spent on additional short-term investments, as I previously mentioned. Also some capital assets were purchased as well for about $102,000. So at the end of the day, the cash went from $1.776 million to about $800,000, and that is in large part, as I said previously, due to purchasing those additional short-term investments of $849,000. The next number of pages, they're the notes to the financial statements. Those walk through two things. First of all, they highlight the accounting policies of the Canadian Kennel Club. There are some choices that can be made in terms of how you account for certain items in your financial statements. There's no changes this year. Had there been any changes to the accounting policies, I would point those out and walk through them with you so everybody was aware. Since there has been no changes, I won't walk through Note 1, which is a significant accounting policies. There has been a little bit of additional disclosure added on page 8 under revenue recognition at the very top, as I previously mentioned about the charity dog show funds being fully dispersed in the year, and about the $50,000 that the board set aside for the election during the year. Other than that, the accounting policies in the first note are the same as the prior years, so I won't walk through those. The second thing that you find in the notes of the financial statements, which begins with note number 2, is some additional details and information that support the numbers in the statements that I previously walked through. So these can provide some good insight and details into certain balances. The notes themselves are the same as prior years. We have not added any notes, we have not deleted any notes. The only thing that has changed in those notes is, of course, the numbers, because as they tie back to the statement of financial position, for the most part, we have updated those numbers to reflect the current year's balances. But other than that, the notes remain similar or identical to the prior year. So I won't walk through any of the notes, but I'd be happy to answer any questions on the notes or on anything else within the financial statements if there are any questions.